Hey there, welcome to Market Mondays. Hopefully, you guys had a great weekend. I'm excited to share you guys some big news that's going to happen this week. But before I get right into it, I'm going to do a quick dad joke. Dad joke today is why do monsters don't eat ghosts? Or why don't monsters eat ghosts? Is because they taste like sheet. Get it? Pew pew. All right, so getting right into it. Last week we got the inflation report called CPI. We got it a little bit later, also because of the delays of the government shutdown. And what was really nice about that number is that it was lower than expectations. Now, I wanted to be very clear is that it did actually go up from 2.9 to 3.0. However, the expectation was that it was expected to go to 3.1. So kind of bring a little more clarity on these economic reports is that before they come out, like inflation reports, unemployment rates, things like that, they give a forecast of how much they're expected to go up or down, right? And if the numbers, less or more, that's how the markets typically react based on the expectation, not so much where it went from. So if, for example, in this case, where inflation was expected to go up to 3.1, but it only went up to 3.0, that's still a good thing. And mortgage rates really like that, and it went down a little bit. However, if the other way was true, where it went up to 3.2, mortgage rates would have probably responded negatively because it was higher than expectation. Now, if it went down to 2.9 or 2.7, sure, that's even better. But that's still another important factor is that we have to look at what was expected. And that's how the market responds based on expectation. Now, if we go straight into the unemployment rate, same thing. The thing about the unemployment rate is that it is expected to go to 4.4%. Now, keep in mind, we have still not received the October unemployment rate just yet. And November unemployment rate is next week on the first Friday of November. That is expected to go up to 4.4%. Now, to think about that, if we are seeing the numbers go up on the unemployment rate, we will most likely see mortgage rates come down just like they did for September and August when we got the unemployment rates showing that it went up. And mortgage rates responded very positively when those reports came out. Now, in addition to that, the October unemployment rates, because it hasn't come out yet, we might be seeing two reports within a week of each other, depending on the government shutdown that being resolved. We might come out and see it the same day. We might see it come out different days. We're not sure. So until they figure out the government shutdown stuff, we're still waiting on for that October unemployment rate. But right now we're just looking ahead for November unemployment rate. I think it sounds like they're in the direction of getting it resolved. It was supposed to be resolved last Friday, but we're at a point where people are still not receiving pay. I have some friends that are like basically playing hooky because they're not getting paid on the day they were expected to get paid. So that's what's unfortunate about the situation about the whole government shutdown is like there's a lot of people who are at risk of not being paid right now. And even a lot more people, air traffic controllers, DOE employees, basically anybody that's employed by the federal government. So that's a big concern. All right, now let's go into how mortgage rates look at this point. So for the most part, most of October, right? So let's go back to when the last Fed rate cut happened. The last Fed rate cut happened back at the end of September, okay? And there's one expected to come this week, actually on Wednesday. And they're expected to cut rates by 25 basis points, meaning it's 0.25%. Now, with that in mind, if you look back in September and even all the other times that they cut rates, mortgage rates for the most part responded as if this time in September, or sorry, last month into September, the mortgage rates actually went up right after the Fed rate cut. Back in October, mortgage rates actually went up as well. And then there were some times where it kind of went down and kind of went up at the same time. So with the Fed rate cuts, I highly recommend not using that as a gauge as to how mortgage rates are going to go because there's so many other layers that the Fed rate impacts before it touches mortgage rates, and all those things are going to be dependent on how they move. So highly recommend do not think that just because the Fed cut rates doesn't mean mortgage rates are going to follow. Actually, just sometimes it's the opposite is true. So the main thing is the two main things are really holding mortgage rates where they are, depending on which way they go, is inflation and the unemployment rate. So follow those things specifically because those, even though those are impacted by the Fed rate, that has a more immediate impact with mortgage rates specifically. So with that in mind, what's nice about since the government shutdown has happened, mortgage rates have for the most part have remained steady. It went up after the Fed rate cut, remained steady, and then actually they started to creep down below where it was in September, at the lowest point in September, which is a good sign. So what we're expecting on Wednesday is the Fed rate cuts 25 basis points. If we get more information as to when the unemployment rate for October come out, and hopefully we're on track for November, we could see mortgage rates come down even further because of those reports. So hopefully that works out for all of us. I have about 11, 12 clients waiting for that report before they decide to refinance. And that list keeps growing. So something to consider to talk to your mortgage advisor or your loan officer as to if it's a good time to refinance or not. But otherwise, say if you're on a VA loan and you're above 6.5, now is the time to really start talking to your loan officer. If you don't have one, I'd be happy to apply for the job. Otherwise, that's all I got for you guys today. New Gavin.